Hello, folks. Welcome to this week's edition of the Satori Traders Precious Metals News. Obviously, we had some big movement in the precious metals markets and, for that matter, all markets last week. A couple of things that moved the markets. On Thursday, we had the Fed coming out and taking what was perceived to be a hawkish stance. I mean, they're threatening to raise interest rates, 18 months from now, maybe. And of course, the reality is there aren't any interest rate raises anytime in the near future. We're talking years, not months. Really, the only tools that the U.S. Fed has at this point is blarney or bullshit and interest rates. And of course, they're kind of at the end of the line with interest rates. Oh, and then of course, third tool, the printing press. And so really it's blarney and the printing press. Obviously, they're going to use the printing press regardless of what they say. So here's gold in the weekly time frame, and currently at a 62% Fibonacci retracement of this big impulsive price movement that we've seen in the last year or so. So nothing really to be concerned about yet in this weekly time frame. That's a big pullback, but not an excessively large pullback at this point. So here in the daily time frame for gold, obviously this is not a pretty picture for precious metals bulls. Again, we had the Fed being perceived as being hawkish. Kind of took the wind out of the sails of the precious metals sector, and obviously there was some futures selling going on selling short for recent weeks and then covering as price dropped. Let's go, we'll talk about that more when we look at silver. So anyway, obviously a bearish picture here in the daily market. I was hoping on Friday that we'd find support at the 1770 level and bounce. Haven't seen that happen yet. That candle on Friday is actually bearish with the big long wick on the top. MACD, well, we've got one indicator line still in bull mode. The other one has dropped below the zero level, so not very bullish in MACD. Energy in the tanker there. So not very pretty picture in the daily market of gold. Looking at GLD to get a sense of volume, and as we can see, obviously we got a big surge in selling volume in GLD last week. On a percentage basis, the real driver of the sell-off for both gold and silver was the futures markets. Let's talk about silver in the monthly time frame. So this is the same thing we saw in gold in the monthly time frame. If this were the only chart we were looking at, we wouldn't even be aware of any out of the ordinary price movement last week. We've been looking at this chart and saying, yeah, it just looks like it's the continuation of this flag formation that is sitting as the midpoint of the price movement. And remember, in general, this is a flagpole, this is a flag, and typically we'd get a continuation of this price movement to the upside and get about that much price movement above the flag zone. So in general, the flag marks the mid zone of the price movement. So looking good in the monthly time frame there. This is silver in the weekly time frame. And again, obviously we were bumping along, pushing at the $28 level for several weeks there, and then got a sell-off last week. But so far just back to what could be a support level. Same idea here is that, here's our flagpole, this is our flag, and so far we haven't violated that flag formation. In the daily time frame, we've pulled back to the 200-day moving average. Got the 20 about to cross there below the 50, which, that's not bullish. Oh, futures. So 3 days. In 3 days, there were 14,000 contracts sold short in silver and 5,000 ounces per contract You'd have to do the math. I don't know. It's 20 million ounces. It's something silly. So anyway, course of 3 days, we had 14,000 contracts sold short in silver. And of course, now they've all been covered. Price has dropped. So, are these markets manipulated? Believe what you want to believe. An interesting data point I saw last week, and just randomly, I saw an analyst pointing out the fact that rhodium, so remember that we actually have 5 precious metals. We've got gold, silver, platinum, palladium, and then rhodium as the 5th precious metal. Well, so for whatever reason, Wall Street has chosen not to create a futures market in rhodium. And well, isn't it interesting that rhodium has gone from $800 to, last time I looked, it was $28,000, $28,500 actually, per ounce. And so in a market that doesn't have futures, rhodium has gone from $800 an ounce to $28,500 an ounce, whereas any of the other markets that you want to talk about typically have futures and didn't have the same performance as rhodium. So just an interesting data point, whether you believe the markets are manipulated or not. So let's keep rolling here. This is SLV, and again, we just wanted to see the volume. Again, we got a spike in volume. On a percentage basis, the sell-off last week was clearly driven by futures contracts, not by retail movement out of GLD and SLV, although certainly these were big, impulsive movements out of the ETFs. Here's GDXJ. Obviously, this is our indicator for the mining stocks. Not pretty last week. We got a big movement, big, ugly, bearish candle, price closing at or near the low of that weekly candle. So pretty bearish picture there. I'm going to give it some time, see what kind of follow through we get in this coming week. Here we are in the daily time frame. On Thursday, it was looking like we were going to find support at this level. And then on Friday, we continued, got some drop lower, didn't get a follow through on volume. So potentially sellers are easing up at this point. And like me, they're going to wait and see what happens. Step aside for a little bit. Energy obviously in the tank. No indication yet from MACD that we are bottoming or could be bottoming. Still, again, big, ugly, impulsive drop on Thursday's open and then follow through on Friday. So not a pretty picture in SIL, the silver miners. And of course, this is what the precious metals market is reacting to. It's this big bullish movement in the US dollar. And so, of course, last week we were looking at this and pointing out that, the dollar in this weekly time frame kind of bumping along here on support. And certainly I wasn't expecting this big surge, this big bullish movement so suddenly, but obviously that's what happened. Now we are pushing right up into a potential resistance area at first it's the conjunction of those two median lines as an energy point, as Dr. Morge would point out, and then we've got the round number at 93 just above that. So that's dollar in the weekly time frame. Here we are in the daily time frame. And again, very dramatic, impulsive movement in the dollar. MACD has moved up into bull mode at this point. Obviously, energy very elevated. So big movement in the dollar last week. Let's see what kind of follow through going forward. Now, the interest rates also made a big move last week, and not really what we might have expected on now I guess they're still reacting to the perceived hawkishness of the Fed, the idea that the Fed might raise interest rates 18 months from now. Oh, and then on Friday we had Bullard, was it Bullard? Yeah, James Bullard came out on Friday and admitted, he's one of the Fed heads, admitted that inflation is stronger than expected. And of course that drove the equity markets even further downwards on Friday. So they play in good cop, bad cop, or bad cop in this case. So here's interest rates in the daily time frame. Again, big push lower last week. Equity markets not happy. They've been, playing with this new all-time highs. Obviously, here we are on, this was Wednesday, we got a drop below that level, and then Thursday just kind of marking time, and then Friday, that was Bullard's comment about potentially raising rates. And so this is SPX. So SPX didn't like that. And then same thing in the Dow, clearly not happy on Friday. And then in contrast to SPX and Dow, here's the Nasdaq on Thursday making a new all-time high. And so I think, and what other analysts are saying, is that this basically it's a rotation out of the inflation stocks back into tech stocks. And so that makes some sense based on this price action. So anyway, that's the Nasdaq. Brent obviously didn't care about the other machinations going on last week. It's continuing to push higher. And just as using Andrew's pitchfork, as we continue with price action going forward, what we do is move our target as price moves. And so in this case, we would be moving this price target a little bit higher each week. And so, this week we'd be setting our target at 778 or even 78.50, simply because some time has passed, and now that the upper median line is, so now our target is 78.50 in oil. Bitcoin, obviously paying attention. This is another market that didn't fare well last week. So anyway, this volume action in particular in Bitcoin I'm watching, and this volume continues to be consistent with a downtrending market. We have volume rising as price drops, and that is consistent with a downtrend. We can see it here yet again on this. So this was the latest rally, and volume dropped. Now when Bitcoin starts to sell off, we can see, well, there's volume rising again. And so volume action is consistent with a downtrend. Nothing bullish about the Bitcoin chart at this point. Folks, that is it for this week. I've got family things this afternoon. Hope you're taking time for yourself and your family. I look forward to speaking with you soon.